can probably missed, so we are apologizing for this for the short webinar this today. I'm sorry, my mind is somewhere else. That's what happens on non-farm payrolls days. Anyways, again, this is the awkward wonk setup that yet again the euro dollar is getting support from. We will see. Personally, at this point, I really see no reason why the euro dollar won't just trade this level, the 1.292s. Again, we have this setup. This chart literally has not been changed for month and a half. People who have been following us from before this service became 100% paid know that this chart was this way before the February top was in place and before we did all the downside. I mean, I don't want to brag, but it's just a very good trade, a very good chart and very clear setup. So what I think on the euro dollar is we are just trying to find support, the proper level from which to go up from. Honestly, I would rather see the 1.292 simply because this inverted head and shoulders is perfect and so on. But who knows? Who knows? Like, it really is not imperative to trade the 1.292. It is a good thing, but not imperative. So that is on the euro dollar. We have this three drive bullish pattern. So pretty much now that this three drive pattern has now confirmed the 144 extension top over here, as you guys can see. We are looking for the next leg of this three drive pattern. This one, okay. Oopsie, oopsie daisy. What the hell is this? Also, this is the full halfway back. Okay, so the halfway back long, that's what I want to point out. The halfway back long from the 1.288s or 1.292s have targets at the top of this weekly triangular range. This bullish triangle on the euro dollar. Like it or not, fundamentalists, that is the way the euro dollar looks like. And the three drive pattern, you can see that if we have to be perfectly technical, this bullish, this bearish three drive pattern from the top of the triangle, says the next leg, which is like the third leg, should be the 144 extension as the second leg was. So that places us exactly over here, where the target of the full halfway back long is, where the top of this triangle is, and gives us a valid short signal. So what I'm trying to say is pretty much that really I expect this to serve as a bottom. We also have the fractal repetition of 2010. You can see this is 2010. We had a similar head and shoulder setup. You can make a case it got front ran a bit, but I certainly don't think this is the case here. I think that it will trade it, but who knows? Who knows? If it doesn't trade it, guys, the plan remains to get the factors that we need to confirm a bottoming process. For example, in today's trading, we for the whole of the day we lacked one factor to confirm the euro-dollar bottom, and that factor was to break the 1.316s. So we really needed to break the 1.316s to confirm the bottom. We need to break this, and everything else was screaming bullish except this, and this alone didn't tell us, and with any conclusive, means that we have bottomed. Again, this is the fractal repetition that I showed. So I mean, Alexander is very correct in expecting the 1.288s to trade. I just prefer the 1.292s because the fractal repetition over here, this channel, that is nearly perfect, is telling us, we are going to see 1.288. You can see the target of the short align with the target with the bottom of this channel, and the exact repetition, fractal repetition bottoming here. So the 1.288s are certainly the best level to go long at. I'm just going to give it a try at the 1.292s. Plus, I remain fairly sure that there are algorithms that are attached on the euro dollar and the 1.292 simply because it is same anchor new high. So that is on the euro dollar, anticipating a few on the bullish levels either today or on Monday, and up and away. Actually, I have to point out that there is certainly the possibility that Uh, we will see March to be a ranging month, just because it can be, you know, just because it can. I know this sounds extremely silly, but it is the way it is. Um, but bias is bullish on the euro dollar. Now, the only thing that is remaining is to get in from the proper level. Now, keeping in mind that this swing wonk has target of 1.41, which is like 1,200 pips, that maybe even 1,300 pips. You know, like really going with a stop under 100 pips is just an overstretch. You know, like I don't see a point of it from a point of perspective that this is such a major level. And you know, like even if I go with a smaller position that should equal my usual stop size, you know, like I don't see a problem with it. So my 100 pip stop loss on this trade is pretty much equal to my usual stop loss on my you know, scalps and stuff like that. So that's about it. On the euro dollar, again, the dollar yen, I see no resistance until 97.5 first, but really I'm looking for the 98.4s as a level to actually consider as resistance and as a potential level for a top. I'm looking for a bit to commence in the dollar yen soon. Actually, speaking of that, let's in the meanwhile, actually, let me just cover that the S&P has filled its targets, so everybody can see the magic of this thing. This chart is an old chart. Okay, guys, let me move to a daily time frame. Maybe is it visible on the daily? Yeah, it should be visible on the daily. No, actually, is it? Yeah, it is. So we held a halfway back wonk within a larger halfway back wonk over here. This halfway back wonk started blowing through targets and gave us an extension wonk entry that respected its 61.8 line. We have now reached our targets on the S&P. Now we have the potential, I hope everybody can see this. Now we have the potential to either retrade same anchor new high over here, you know, so go down to 1,500, the 15 of ones, or start a new series of extension longs, which are a buy from the 1.542s against the 1.54s. Now, 40s, 1540s. So that is on the S&P extremely bullish. We will see what we trade next. The euro dollar actually seems like it might fuel us today. That's not necessarily bad news at all. Let me cover. So okay, that is in the euro dollar. We will see what goes on next. In the meanwhile, let us move to the pound because the pound was my baby today. The pound, you know, traded its next in the series shorts yesterday on the what is it called? Uh, on the BOE decision. We also have this short, so we have double shorts go to target now over here at the 1.49. So I would expect to see a retrade of the next in the series, at least maybe because from over here we had a series of traditionals as well. So I would expect at least a halfway back short from over here. You know, ideally, you know, next same anchor new low. That is ideally, of course, ideally. That is the keyword here. That is the ideal setup. Um, so the pound remains bearish, and the trend remains bearish until it fails. Although there is certainly the possibility of a larger rebound given the aggression of this down move. We will be taking shorts until they fail. No point to, you know, say anything else. The Aussie, whoa, chop and slop, eh? As you guys can see, I haven't updated this chart in a while. However, the important thing to mention over here is that the Aussie dollar has hit targets on this short. Actually, what was that? No, I don't know what that is. Okay. So we are now trading this extension short that traded one time two target over here, and we are now trading same anchor new low. The euro is getting participation from that short level of participation. We will see how that goes. We also have halfway back longs trading. I said a while ago that I was expecting something like this to occur, move a B wave to the downside, then a sharp C wave to the upside into a halfway back short before we see more downside to the bottom of the daily triangle. So if we actually, well, the Dow yen is plunging, no, nice. So I might get stopped for like 15 pips or something. That is what I'm looking at, and something like this. I think that we have to finally, like complete this triangle. I can make a case that this triangle is completed now, but I don't particularly like it, There's several reasons why I don't like it actually, but the main one being that from my point of perspective, and again, that is from my point of perspective, I would like to see an ideal touch. Now, the thing that I have been saying on the Aussie for quite a while now, and I've repeated over and over again, is that after all, this is 6 months range, 6 month worth of range, and really, unless you are like going into the bottom or the top of the range, you are risking of getting whipsawed within the range because like measured moves within a range are really not a take. So I would be taking a full halfway back short, that's for sure, on the Aussie. However, like a trade of the 1.115, I might actually go long if we see the 1.115 here against this low for a C wave correction to the upside. Simply because, like you go to the 15-minute chart, and on the 15-minute chart, guys, you clearly see that this whole thing could have been a B wave, some form of a triangle B wave, and to now see a blow to the upside, whatever it is, however it trades. I think that the Aussie is gonna see is going to correct a bit higher. Actually, the way I view it is, this is so good with this non-farm payroll spike, great for the economy and all that good stuff, but they really couldn't care about the print. What I see is just yeah, 101. So I would buy the 115s if I see them, but again, I would need more information. So what I was saying is the way I view it is that this is just acceleration, acceleration, uh, acceleration of the trend, and I don't see anything bearish or bullish here from the point of perspective from the print. I see the euro dollar feeling bullish long levels. I see the Dow yen and the euro yen being extremely bullish. I see the Aussie dollar in a weekly bullish trend, in a daily bullish range, and in an hourly range. So really, these prints here and there make no difference to me, and trust me, they don't make any difference to the Fed as well. You don't make analysis on one data point to begin with. And I mean, let's face it, Bernanke made it very clear that he's not going to stop easing. So, keep on hoping that Q infinity is going to stop, right? No, it's not going to stop. It might actually get decreased in value, but at the 4 trillion balance sheet of the Fed, I don't think it even matters. Until the Fed starts shrinking the balance sheet, really, yeah, it is. But I think that halfway back is going to fail simply because that is what the Aussie likes doing. But it is a take, bro. And actually, you can see we are getting like I can make a case. This is A, B, C, D, something like that, and bullish shaded to a triangle. So what I can make a case of is if I'm wrong and we don't test the downside as I expect, we can actually just go straight up from here. And honestly, I wouldn't be surprised at all, guys. I wouldn't be surprised one tiny bit if that happens. Again, on the Dorian, I'm looking for 97 by the end of the day. I am looking for 97 by the end of the day, guys. Let me just check. Andrew sent me a chart on Twitter. I just want to check what he's saying. Mm-hmm. Mm-hmm. So, yeah, so this is the other possibility on the Aussie dollar. I said yesterday that I won't go into too much details on the euro, on the Aussie, and all that good jazz because of the NFPs. As you can see, what I did go into details was the euro yen and the dollar yen, and those really did work out great. Simply because I anticipated whatever the print was, it was going to work. However, with the euro dollar and the dollar yen, and with the euro dollar and the Aussie dollar and pound, actually, it's good the pound. The pound was freaking clear as well. With the euro dollar and the Aussie dollar, I really try to refrain from, like going into too much detail because I knew that today's print could do this. I'm not surprised one bit by the print, by what happened today. Simply nothing surprising, guys. I mean, I don't want to sound like an asshole, but really nothing surprising. Oh, so the Euros is, I totally missed this. The thing went into my wonk level. Call me crazy, call me maybe, and I missed it. Well, okay, I'm going to be taking a live Euro Aussie wonk with a 1.255 stop loss, 140 pip stop loss. Okay, I'm trying to decide on the leverage. 30K, Alex. Offload 10K for 100 pips and then offload. How to do it? What do you think? The euros. Because the target here is 1,500 pips, so I'm not sure what leverage I should use. I have a lot of exposure across the board, so I really want to keep my exposure low. Huh? So you know what? I'm gonna do this differently. I'm going to buy here with a bit more leverage, and I'm going to use the stop loss of 1.26. 1.2. That's 8 pips. Can you talk Kawian, please? Uh, okay, so I am going with a 1.26 stop on the Euro, and uh, and the target of 1.4. Okay, so that is some euros. I hope this one works. So let's see, that is on the Euro Aussie. Actually, I just want to check if if the neckline on the daily chart has traded. Yep. Yep. Okay. So we have traded the neckline now officially. We have also traded the bullish bat. So this should be strong enough potential reversal zone to take us higher, which I'm not sure how it's going to happen. You can make a case it's retrading it, and it's potentially a bit dangerous to take the second test, but that's about it. So that is on the Euro Aussie. I want to take the Euro Pound. Euro Pound should be going to targets eventually. Still has some few targets above us. We'll see how that goes. And that's about it. Here, not much to say. Let me think. Anything else that I have to cover? Well, that's about it from what I have to cover, guys. Do you have any questions? Any questions, guys? Because if you don't have questions, we are going to conclude this webinar and go over our portfolio in brackets, our Forex portfolio, and do some work. Anything, guys? Why would it be risky, Rafael? I don't get your point. It is risky from the point of perspective that I don't view it that way, bro. Each setup is its own. I view a valid long level. The only thing risky about this long level is that it already made longs 3 once. That is about the only risky thing with this trade is that we already made long 3. By the way, this looks a bit like an ending diagonal, so I would expect a sharp rebound to the upside fairly soon. Again, I mean, I am not. How can I say? I'm not disagreeing that there is the possibility for the euro to shit, the euro yen is not working. Annoying. I'm not disagreeing with the possibility that there is the chance for the euro to need to feel its levels and all that good stuff. But I just like the setup. We'll see if this works. I have went with a much smaller stop loss than I should have, and like if it doesn't work, I'm going to close prematurely. Again, it wasn't given as a limit order, so I mean, obviously, I am taking a bit more risk over here than ideally what the risk should be. So keep that in mind. Keep that in mind, guys. So the euro yen is in what I consider a long setup here. Let's see if the dollar yen gets a rebound or if that was all the fun for today. So guys, that's everything from me. I don't see anybody having any other questions. Uh, I will see you next week and take care. Well, okay, the dollar yen is not going to work, and seems like the euro yen might stop me as well. Damn. Oh well. Have a good day, guys. See ya, and so on.